A day off by taking massive action. The action stands for accepting all possible losses before entering a trade, preparing you for any outcome, setting yourself, body, mind, and spirit, ensuring a balanced approach to trading, trusting your education, strategy, trade skills, and intuition. Imagine your trade successfully materializing, obeying your trading strategy, avoiding decisions based on greed or fear, and never looking back or stopping once your trade has commenced. So, good people, glad to be back. Uh, Weekend where I celebrated my sister and my new brother in their wedding. We had a great time down in New Orleans. Um, and good time to spend with family. Family that I hadn't seen in 30 years. So it was an awesome time. Good to be able to get away and reset as well. So I am working on getting caught up. We also had this crazy layover. I mean, not layover, but a delay yesterday because of some storms coming out of the south. Uh, but so I didn't have a chance to get caught up yesterday like I originally had planned. So we're going to do that today as we take a look at everything and the preparation for these tariffs that go into effect tomorrow. So let's get down to business. If everybody can hear me okay, drop me one in the chat and we will get this underway. All right, appreciate it. All right, so let's slide over to go trading economics first. Updates on the day. So we got a Eurozone inflation rate at a 4-month low. 4-month low. Um, the annual inflation rate in the Eurozone slowed for the second consecutive month to 2.2% in March from 2.3 in February. Preliminary estimates showed energy prices returned to contraction, right? While services inflation also eased. Meanwhile, core inflation dropped 2.4%. It's the lowest level since January. So in the Eurozone, we got things slowing down, right? We got things slowing down as they are working on other things to kind of prepare and combat the tariff situation. But inflation coming down at the moment. We'll continue to watch and see how things evolve as we go. And we got gold. Gold. Fresh record highs at 31.30 per ounce on Tuesday as investors flock to safe haven assets ahead of Donald Trump's tariffs rollout that has heightened fears of a global trade war. All right. Trump said that reciprocal tariffs set to take effect on Wednesday will apply to all nations beyond just a smaller group of 10 or 15 countries. Right. Additional automobile tariffs will follow on Thursday. Combination of other factors, including rate cut bets, central bank purchases, and demand for ETFs, also contributed to uh, gold's record-breaking rally. All right, and we still got gold pushing. Um, in the previous session, the precious metal recorded its best quarter since September 1986. Meanwhile, investors are closely monitoring key labor market data, including today's jobs openings report, Wednesday's ADP employment figures, and Friday's non-farm payroll for more clues on Federal Reserve's rate cut path. Benny touched on this over the weekend, and I agree. I don't know that rate cuts are coming anytime soon. I don't know that they are, but we'll watch and see what happens and how things roll. All right. So that's gold. Continuing to press. China manufacturing. The Caixin China General Manufacturing PMI rose to 51.2 in March, up from 50.8, surpassing the expectation of 51.1. This marks the highest reading since last November, with output growth. The upward growth accelerating um, due to a sustained rise in new orders amid improved demand conditions. Additionally, foreign sales grew the most in 11 months. Firms boosted their buying levels in response to a renewed rise in stock purchases. Meanwhile, employment increased for the first time since August 2023, albeit only marginally. Backlogs continue to accumulate, keeping the gauge in positive territory for the 6 months. Delivery times lengthened for the first time since October due to shipping delays. Um, on the cost side of things, input prices fell for the first time in 6 months due to a lower raw material cost. As a result, output prices dropped for the fourth month amid greater market competition, right? Lastly, business confidence weakened due to rising uncertainties, particularly in trade barriers around the world. So we got a couple things happening, right? We have um, a lot of companies putting in big orders to try to in preparation for these tariffs. So you got a lot of orders going in, trying to get things ahead of get the orders in ahead of these tariffs that go into effect. So you got a lot of activity happening, and this is causing issues in multiple sides, including at the ports, right? With influx of orders starting to come in. They've been coming in since these talks started. So you got backlogs. Uh, you got ports being backed up, but you also have orders being backlogged, right? So this is going to be a trickle down effect. Um, and we'll see what the ultimate impact is on as these orders start to get put out and how they're offloaded and what that looks like from a port perspective. But already seeing some congestion on the shipping side of things as well um, when it comes to orders coming in. So, but manufacturing picking up in China, okay. Then we'll see how long this lasts and what it looks like after those tariffs come into effect. And we got Australia. Reserve Bank of Australia maintained its cash rate at 4.1 during its April meeting, retaining borrowing costs unchanged after 25 basis point cut in February, in line with the market expectation. The board noted that monetary policy is well placed to respond to international developments if they were to have material impacts for Australian activity and inflation. The central bank expressed growing confidence that inflation is moving sustainably toward its midpoint, um, as higher interest rates have helped bring aggregate demand and supply closer to balance. However, the RBA also highlighted an uncertain economic outlook for both domestic activity and inflation. Global risk remains significant, driven by geopolitical and policy uncertainties such as U.S. tariffs. So they held rates and they're watching tariffs. That's the story. Uh, mm, mm, mm. Yeah. And then major European stock markets opened the second quarter on a positive note. Stocks 50 rose by 0.7%, and the Stock 600 gained 0.8, marking its first advance in four sessions. The rebound came after both indices slumped around 1.5% in the previous session, hitting 2-month lows. Investors remain focused on the ongoing trade war. Um, with the so-called Liberation Day for the U.S. set for tomorrow. President Trump is expected to unveil his reciprocal tariff plan, though uncertainty persists regarding the scope and the impact of the measures. Meanwhile, inflation in the Eurozone slowed, second consecutive month. On the corporate front, shares of SAP plus 1.7%, LVMH up 1.1%, ASML Holdings up 1.8%, L'Oreal up 1.8%, all trading higher. All right. The auto sector also saw gains. Mercedes-Benz up 0.2%, BMW up 1.6%, and Volkswagen up 1.6%. Right, you got a lot of your companies, or a lot of your buyers in the Eurozone moving away from Tesla. Right, Tesla's down 37% as far as their sales in the Eurozone. So, and you got that activity moving over to some of the other automotive brands. So that's where we are from trading economic perspective. Over to the calendar, right? Data from yesterday had some PMI data come in out of the Eurozone. Go back to Monday. Well, Sunday, you had that China manufacturing number. Yesterday, Monday, German CPI came in um, as expected. Then, ba, 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 ba. Taking the manufacturing index came in above expectation for Japan. All right. So that's creeping up, which the Bank of Japan likes. We had, right, and there's your Australian cash rate. And then this morning, retail sales for the Swissy came in just above expectation. You have this is your European PMI data mixed throughout. And there's your Eurozone CPI data, your flash estimate there, coming down. So later on today, you got Christine Lagarde speaking at 8:30, FOMC member Barkin speaking at 9. You got manufacturing PMI for Canada, 9:30, 9:45. You have final manufacturing PMI and ISM manufacturing PMI for the United States. And you got Joe's job openings, again, where market participants are watching that data to see where these things start to fall. Later on today, you got not much, not much there. Tomorrow, right? ADP non-farm employment change, which market participants are also keeping their eyes on. Got Donald Trump speaking regarding this tariff rollout plan. You got crude oil inventories. More members speaking. And then on Thursday, you got a CPI for the Swissy. You got OPEC meetings kicking off. You have monetary policy meeting minutes for the Eurozone, 7:30 on Thursday. Unemployment claims for the dollar, ISM services PMI for the dollar. Unemployment claims for the dollar. FOMC member speaking. Then on Friday, we got right our regular run of the mill employment and unemployment change, hourly earnings, non-farm payroll, employment rate. And you also got Fed Chair Powell speaking, along with other FOMC members speaking on Friday. And you got daylight saving time shift coming out of New Zealand and Australia. All right, so be an interesting week. All right, as things roll out, we'll see where the market moves, where it goes, and all of that jazz. So, questions from a fundamental perspective. Eyes on tariffs. That's the deal. No, no. Uh, Benny, good morning, bro.
Good morning, Ryan. Good morning, everybody. How are you, Ryan?
I'm
How was
doing
the
well,
trip?
man. The trip was great. Had a late return last night, man. The layover was
Yeah.
crazy. I mean, the delays were crazy yesterday, but I'm doing well, man. I'm glad to
Good.
be back, getting back into the fold.
Glad you're back safe.
Yes, sir. Yes, sir. What's up? What's up with you, man? What's top of mind for you?
Liberation Day, man. I love
Ah,
whatever the hell that is. Well,
exactly.
tomorrow, but the market is skittish. I was listening back and forth like all the shows, all the market participants, major investors, like they all over the place. It's pure speculation right now. So that tells me to relax, and let's see what happens until they interpret what all of this means, after tomorrow. If they see what's going on and they figure, oh, it's not exactly what we thought it was, maybe we see a rally. Maybe we show a short-term rally, who knows? Uh, but it's mixed. It's mixed whether or not, you know, uh, the market will make a run after everything is interpreted, everything will start a U-turn, or if it's going to continue to decline. So I'm gonna wait and find out.
Yeah, man.
Wait and find, I'm gonna wait and find out. But for amidst all the chaos and the back and forth, one thing was common: people are sitting in cash.
People are sitting in cash,
People,
bro.
people, are, people, are, yeah, people are sitting in cash, and it was a huge debate. It was between two. Uh, One was a trader, and one was an investor. And the guy was saying that if after the crash in 07, 08, if you adjust, if you he was like the toughest thing to do is to buy when that market is falling. So it was major investor versus a major trader. And the investor is just like, if you had just bought at that low point, you would average from that point, you have averaged just by the S&P a 9% annualized return on average, the S&P. From the time when we had the crash 07, 08. And he pretty much he told the trader off like, I know you're a great trader. He was like, but historically, trying to time the market, majority of people fail. Like he just told them flat out. Like the majority of people fail doing that. He's like, but if you would have just bought the S&P and just sat and held it through all the corrections, through all the mess, just in the S&P alone, you have gained an annualized return on average of 9%. The S&P,
Can't go back from it.
and then the,
But
and
yeah.
then the, and then the segment ended like it was rap. Well, he just like they just went to commercial, So just a difference in perspectives, and just the power of being able to buy and hold positions and see the opportunities, you know, in the corrections. But once you make the decision to buy at a perceived low price, like just the ability to hold it, through all the challenges, through all the ups and downs, just over the long term is just better. It's just better
Right.
to do it that way. It's the point. It's the
Right.
point he was trying to make. And people, the average person, to have more success doing it that way, as opposed to constantly and always trying to time the market.
Trying to pull up this other chart here to look at that history, but
Yeah,
my stuff's struggling this morning. So, but yes, trying to pull up that chart to go back to 2008 and look at that rise. But if you just go back to 2020,
right,
um, not exactly the same situation, but a similar major correction and then crazy run.
correct, correct. I mean, just think about how we follow things fundamentally, right? We're that's our edge, you know.
Hmm.
Uh, and the run that gold has made,
Exactly.
and think about the environment coming out of when we came into 2020 2024 saying, hey, gold 2,600 because of interest rate cut environment, you know, and then what happened after that? Like it just kept running, right? All of 2024. And then you look at fundamentally, people are still either cutting rates or holding rates. So that part really hasn't changed. Like nobody's really raising rates, right? And then the fact now of we already know fundamentally, you know, gold is that safe haven during times of uncertainty where we have uncertainty. And gold, what, up over 3,100? Some
Hmm.
some crazy, right? So just think,
3150.
yeah. so just think about, which we had to go into that extension on the daily. So just think about the ability to hold those positions over time. So those are my thoughts for this morning, man.
Powerful ones, man. But it's true, right?
Yeah, yeah,
Shifting the perspective from a trader to an investor and truly looking at things, hey, understanding historically what's transpired and ultimately, and you've been talking about this for a while, bro, but the market is designed to go up. So when you look at it
yeah.
from that perspective, you then understand the quote buying the dip, right, and where that comes from. But as you are building your portfolios and looking at things from a different perspective, you're able to say, okay, this isn't as scary when that market goes into this correction territory. This is actually an exciting time. You know what I mean? Um, so yeah, bro, it's definitely an interesting time. Um, but I agree with the investor. I agree with the investor, man.
I do too. I think where we could have, um, we talked about this, last week, where we haven't, as just not fundamentally, but understanding the flip sequence and recognize when those higher time frame extensions are being hit, which could enable us to reduce positions, right? Reduce positions, and once the market corrects, add back to those positions.
Hmm.
So doing that, you would average, he said on average 9%. You probably would average more than that, because of we know that, but still being able to know, hey, this is bullish, being able to recognize that, hey, this is just a correction, and then making a few adjustments from there. But
Right.
that's pretty much the game, man. That's the game.
That's the game, bro. That's the game. It really is, man. And just continue to evolve with the market, right? The more we learn, the more we pay attention to the details, um, the more we're able to truly understand how this money world actually works. And it gives us so much insight in so many other areas. So cool deal, bro. I appreciate you, man. Um, Before I dive into the charts, how folks that are trading Darwin, how are things looking? How are things going? I know we only got some of the folks not on here, but how are things looking on the Darwin side? Anybody? Folks might be busy, but so far so good. Beautiful. Beautiful. Still making progress. I love it. I love it. But like on that side, right? One of the things, and we're working to get a representative on sometime in the near future to chat with us again. But one of the things that we're learning and we're identifying, still trading. Uh, we'll talk more about that, Reese. But one of the things that we're identifying is like from that investor perspective, um, as you're able to hold these trades and really look at it from that perspective to grow that account, right? And you can hold the trades through the periods to continue to increase those allocations. And you don't have to close the trades out at the end of the month, and you don't have to do all of these things, but you're able to shift that perspective and look at it from an investor perspective, um, and hold those positions longer as we look at the market coming into some of these lower prices um, as these tariffs come into effect, as the geopolitical situations do what they're going to do. So we're able to shift that perspective and really grow the account to ultimately increase the amount of assets under management. So um, just curious, we'll talk about it more, Reese, and get into some of these details that we're learning as we continue to evolve um, as investors. But uh, just wanted to get a pulse there. Um, Trying to understand how it works. Okay, cool deal. Yep, we got you. We got you. Good note. Um, let's look at some of these charts and get caught up, right? S&P 500, we are still range bound. I mean, not SP 500, but DXY, right? We're pressing sideways, trying to figure out what's going to happen tomorrow, right? This is in line with Benny's sentiments of nobody knows what's about to happen, right? Nobody knows what this is going to look like. So, from a dollar perspective, we're waiting to see. Okay, we're waiting to see what happens. We haven't had a deep retracement yet on the DXY on the daily. So we'll see if we do get that push down into that 118 127 zone, or if we get a push down to the D extension, right? Or if we run back up with a slight rally before the major impact of said things. So, but that's the DXY range bound right now. All right. Just moving sideways. So I want to take a look at the indices first overall, and then we'll hop back into gold and break that down a little bit further. Oil and natural gas as well, as I got some thoughts on natural gas. But S&P 500, right, down. We're at a 50% retracement on this fib that we had to draw manually there. But market's been moving down, right? We got this correction. We haven't been able to break back below this daily level at 5,500. But I'm curious to see as we move into tomorrow, do we get that continuation down deeper into the zone here, right? Benny talked about on Saturday us being in that 10% range, right? Being in correction territory. But do we press further? Come down into the 78686 level, potentially even back to 5,000, right? Potentially back to 5,000. We'll look at this on the 4-hour time frame, look at these down fibs and where some of that lands us. But that stochastic is coming out of that sell zone, right? So we still got some downward momentum coming. And we'll watch the market and see what happens tomorrow and the fallout. But here on the 4, right, running fibs to the downside, we have 50% retracement on this down fib, right? And the D extension is right there at 53.43. Okay. Right in that zone that I'm watching, which is around a just shy of a 786 retracement on that capital fib. Okay. So from a 4-hour perspective, looking at more downward potential, we got the stochastic coming into that sell zone, right? Getting into some alignment with that daily time frame, right, of downward pressure coming. So we could be in for that next leg down in the sequence. Okay. So looking for more short activity to be on the way. And as we get down, like I said, this is 5,300, 5,200, 5,100, potentially down to 5,000. Um, we'll see where we are fundamentally and see if things start to level out and set us up for a return back to the upside. Okay, so watching that there, but looking for another leg down. Coming down to the 4, I mean to the 1, right? Fib on the 1 also has the extension right there at 5,400. Okay, so another leg down there, and we'll watch and see as we move through the day today and into tomorrow. Okay, so that's the S&P 500, looking for another leg to the downside. Any questions here?
Nope.
Nope. All right, cool deal. Cool deal. US 30. Same deal, right? Downward pressure. There's our fib there. We're at a 50% retracement. Looking at the sub fibs coming off the top, we got a 8.6 retracement here, came into this daily resistance level, and we turned over. Stochastic coming out of that sell zone with the downward pressure, right? So looking for more of that. We got previous weekly level here at 40,000, which we'll watch and see how the market responds. That'll give us that last wave to the downside to finish out that ABCD sequence. Okay, and we'll look to see where we are fundamentally, where we are stochastic, and see if we have things in alignment, or do we break down even further, come into this 38,000 range. Okay, that'll be the next level that I watch if we break 40,000. Okay, so again, same story as the S&P 500 and the things in line with that. So we come down to the 4 and you see this a little bit more clearly here. 8.6 retracement, the daily resistance, and we're making our way to the downside. If we run a sub fib off the C here, right, you see we got a 618 retracement, matching the extension just shy of that capital fib extension at 40,256. Okay, so all things are coming into an alignment, stochastic back into that sell zone, right? Coming into alignment for another leg to the downside. Okay, and you see here we broke below that cloud. We came back, retested the cloud. We're bearish ahead, right? So all of our indicators, all of our additional confirmation points are also pointing us to the downside. So looking for this next leg down. Okay, if you're trading this opportunity, right, to play that move to the downside as the market goes, or be patient and wait, right? Allow price to get to the bottom, right? And then look for buying opportunities. So headed to the downside on US 30. Here on the 1, there you are, 618 retracement. You see the consolidation there, right? Your cloud is also moving sideways. So looking for downward action. Okay, that stochastic is still trying to rise here on the 1 hour. So you could see a little bit more consolidation here before we get that breakdown, but ultimately looking for a move to the downside. Okay. Questions on the US 30?
No, sir.
Deal. NASDAQ, same story. Same story. We're headed down, right? We come here to the daily, and this one is a little more interesting. We're sitting at this daily support level. We weren't able to close below 19,097. Okay, so we got some indecision happening now. The stochastic out of that sell zone, getting closer to that buy zone. So we'll watch and see how this one moves. But got a 382 retracement here, right? Matching extension 17,191. So if we are able to break this 19,000 level, okay, 17,000 is our next target. Okay, 17,000 is our next target. So I'm watching here to see how things evolve tomorrow, right? If we get that breakdown and that continuation, and then I'm looking at these low prices, and then I'm looking at these low prices for uh for opportunity. 17,690, right? And see if we're able to settle in these ranges here. Okay. So that's what I'm looking for. So we're all waiting to see where things go. Okay. Down on the 4, right? Fresh AB boundary. Beautiful ABCD wave here. 80-20 on the reversal. Got a high price, and then we broke down, right? So we'll look for another high price, another retracement here potentially coming throughout the day today before we get to tomorrow, right? We'll see if we get a rise here on the 4, leading us to a breakdown, bringing us back down here, right? Back into that zone. That's 17,875. Just ahead of that 17,323. Okay, so we'll see if we get this action today, leading us into tomorrow. Okay, so that's on the 4, looking for a potential short-term retracement and then a sell-off. Coming down to the 1, around the fib off the high, it took out the A. Right, similar story. Just wick that 118 level, giving us that 80-20 there, and that kind of sets us up for that push back to the upside potentially before we get that sell-off. Okay, so on the Nasdaq, we might get a high price, but then we may not. Right, so we'll watch and see if we do get price to run up today, um, in preparation. Okay, so that's where we are there. Questions on the Nasdaq 100? No,
Not at all. Just staying patient.
staying patient, man. So that's the thing across the board there. Let's take a quick peek at oil. Running long, right? That 80-20 is playing out beautifully for us. Stochastic back into that sell zone, so we might get a pullback back into this range here, which we'll look at it more on the lower time frame, but looking for a pullback to come in this range here. Right? Could come lower, but looking at that range there for a retracement before we get this continuation to the upside on oil. Okay. So as we come down, right, we 80-20 on the daily, right? So ultimately we're looking at these ABCD waves to the upside. Okay. Here we do have an 80-20 on the sub fib, but strong bullish action. I don't think that one plays out to the downside. I think we continue moving long. Okay. So we come down to the 4 and look at those sub fibs a little closer. And this is the action that we have, right? Previous fib, we only got shallow retracement before this run up to get to the D extension. So we didn't get this deeper move here. And we broke this daily resistance level in a strong bullish fashion, right? So that's out. Now we're looking here. Okay. This is that zone that I marked out on the daily. I'm looking for a pullback to come into this range. Okay. Um, so that's what we look for. Look for a low price, ABC, and then look for that next leg to the upside. Right? Next target, 73.87. Okay, as we continue to finish out this 80-20 on the 4. Right? We got to that 382 with that push. Now we'll pull back, retest key levels that we broke. Right? Retest this consolidation area here. And then we'll look for the move along. Boom. Same thing over and over and over again. Right? So that's what I'm looking for here, right? And unless oil just continues to run long, right? But we might get a retracement here after that nice breakout, right? Come back and retest the levels and then push long. And then I'm looking for ultimately this capital fib on the 4 to be taken out as we move into the higher 70s, right? Potentially back to $80 a barrel. Okay, so that's on your 4. Down to your 1. Okay. There was your 80-20 there. We're already into a 618 retracement level on the one, right? So we'll run these fibs. That one got taken out. So run this here. Boom. And this is where we are in the sub fib. B boundary. Look for a retracement back into our zone. The next leg up. So those are my thoughts on oil as we move through the next couple of weeks. And the way that I'm approaching all of this is buy and hold, right? These just like Joy, she's not on right now, but holding positions for quite some time. Like she's been holding positions since September, I believe. Right? Just allowing the market to do its thing. Um, and when it comes to Darwin, right? As you're trading that, those payouts are on a quarterly basis. So what you want to do is continue to accumulate the profit, be it from a buy and hold perspective, or if you're in and out of trades, right? As you make the profit and you're able to increase uh your ranking and get into a minimum of 75, you're then able to get additional allocation that on the backside they copy your trades, and that's where you get your payout on, right? Um, so from a buy and hold perspective, I'm just sitting in these trades, sitting in these positions and just allowing them to accumulate, right? And playing the pullbacks to be able to add to those positions, right? To build that longer term, larger position. So as we pull back here, I'm gonna look for a buying opportunity to add a position as oil continues moving along, right? Um, and so each month, if your ranking is 75 or above, right, that qualifies you for additional allocation dollars that you're able to um, ultimately trade with to make profit, right? So they're investing in you as a trader, um, and copying the trades on those dollars to give you a payout. But that's oil, right? That's oil. Questions on oil? Nope. Okay.
Nope.
Cool beans. Now let's take a look at this natural gas. I think we're getting ready to continue this move to the downside, right? We're in an interesting space here, right? Coming into some warmer temperatures and seasonality, right? Mhm. Stochastic is pushing to the upside here on the daily, right? Coming out of that buy zone. We've already got a 382 here, but strong reaction off the top. I'll pull this out for a second. Had a strong reaction off the top and a move down. All right, we came into this daily support level. This was, what is that? 374. All right. Support level here where we pushed back to the upside, came back down to that support level, pushed back up. And this resistance level, you see we got a reaction and we're moving back down to the downside, right? We could be in for a head and shoulders pattern here. For another move down into that 78686 retracement zone. Okay, we'll look at it on the 4 as well. But if we get the swing high to form on the daily, right, this turns into an engulfing candle to the downside. We could be in for this head and shoulders pattern here, right? So more downward movement giving us another low price to then get back long uh, at some point, right? Um, if we come back, weekly doesn't give us a ton, right? Here, we got a 618 retracement. We're moving to the upside. We've just been kind of consolidating in this range, right? So it could potentially come out to like a double bottom if we move down to this 29.79 level. But I'm watching this to see if we get this head and shoulders to play out, right? As we come back down to the 4 and we look at it, right? We've already turned over here, strong bearish action, pullback, and we're turning back over to press down. Okay. We zoom back out and put our fibs back on. Okay. We've gotten we got a 50% retracement. Okay. But my question is, do we press deeper? Okay. Do we come back to our uptrend line here, right? That'll kind of come into alignment around this 31.97, 32, $3.20 level, right? Do we get this move down, break that neckline, retest, give us that last push down to this deep retracement zone? Okay. So we've already started this over here on the 4. If we get that swing high on the daily, watch out for this, especially if we get back down to 374. And then uh retest and continue moving down. Okay. So watching this play out here. Okay. Watching this play out, but looking for more downward pressure to give us low price to buy. Okay. As we come down to the 1, we took out the A there on that fib. So pull that out. And we can run these fibs off the low just to track, right? AB boundary moving down. But I do believe we're going to take this A out and continue moving to the downside, especially as we move into the springtime. Okay. But obviously but that's what I'm looking at here is head and shoulders on natural gas to the downside. Questions on that? Thoughts on that? No. And Durashki. And check that out, Reese. Check that out. Yep. All right, cool. So those are my thoughts. So we'll see how things continue to evolve there on natural gas. But I'm looking down. Appreciate that. And then gold, we talked about it, right? Gold record highs. Okay. So now where do we go from there? We're pushing into 80-20 zone here. Right? Been running. Shallow retracement, momentum takes it long. Here we had just shy of a 50% retracement, and then we ran off. So now we just wicked that 118 level. Okay. Do we push deeper into that zone as we move into tomorrow? Right. And does that momentum just carry us to that 3,300 level? Okay. Long on gold, but question is, do we get a retracement before we get that continuation? Okay. So watching it from that perspective, but we could have an 80-20 setting up here, at least to come back and retest the B boundary zone and this 29.56. Okay. So watching that develop there, come down to the 4, come down to the 4 here, and we'll run the fib to the upside. And we got a fresh B boundary here, right? So if we push into the 118 and 127 zone on the 4, that'll be deeper in the zone on the daily, right? Giving us some alignment on the daily and on the 4-hour. as we head into tomorrow? And then do we see this type of action? Okay. So watching the developments. Okay, watching the developments there. So down on the one, similar story. Took that out. Highlight this. All right. Similar story, right? So if we press higher here, we could get to the D extension on the one, right? Set us up for a fresh boundary and then that retracement. But overall, long on gold. Just when does that retracement come? Particularly watching this one off the higher time frames, looking for the 80-20 on the higher time frame to give me this low price, right? For more buying opportunities. Still long on gold. Governments are still buying gold like crazy. That hasn't slowed down since 2020, 2021. Governments, central banks have bought more gold than ever, and that continues. So, as long as they're still buying, so will I. All right. So that's gold. Looking at that long, even after some profit taking. Questions on gold?
Nope.
All right, we didn't get through a ton this morning, but just sitting tight, being patient, man. Just sitting tight and being patient. Um, Allowing the market to tell us where it's going to go. All right. In the meantime, we can prepare to make sure we have the assets available to make the purchases when the market is ready. All right. Not from a timing perspective, but as things continue to move down, right, starting to build those positions, looking for those longer term reversals back in our direction. All right. So that's where we are. Benny, anything before we wrap it up, bro?
Liberation Day, man.
We should make that the title of this session. Liberation.
Always marketing, man. Always marketing.
uh, so good people. Continue to be patient. I'm gonna check out that interview. And Ben and I'll talk about doing some more training on Darwin and what that looks like, and how it really works in the detail. So as you're trading it, you can have a better understanding of what to look for and how to move there. All right. We'll be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time for this pre-New York session. You guys have a phenomenal Tuesday. Peace.